Housing market finance is back on the public agenda. Congressman Jeb Hensarling of Texas recently sat down with the Foundry to talk about the taxpayer bailout of Fannie Mae and Freddie Mac and how his legislation would get the government out of the mortgage market.
Congressman, thank you for agreeing to sit down and talk with us about a couple of issues. Let's start with Fannie Mae and Freddie Mac. There's been a lot of debate over whether or not they should continue to exist. You don't think so? Why not?
Well, right now, they represent the single largest bailout in America's history, almost $200 billion coming out of the pockets of working men and women in America. That's simply unsustainable. Today, taxpayers are on the hook for another $5.7 trillion worth of guaranteed mortgages, again, potentially coming out of the pockets of working men and women all across our nation. Today, the federal government has a virtual monopoly on housing finance. This is not good in the land of the free. And what that leads to is essentially Washington elites now control who can receive a mortgage and who can't. Ultimately, we have to get out of the boom-bust bailout cycle that a government control in Fannie Mae and Freddie Mac represent. And so it is time to phase them out, and that's what we do in the PATH Act.
Well, so now, and I want to move to the PATH Act, but first of all, I mean, Fannie and Freddie have paid back most, and some say a little bit more than what they actually borrowed from taxpayers. Isn't that a sign of a government program that works?
Well, if that was the only requirement, I suppose we could start up Uncle Sam's Burgers and Fries, and maybe we would make a profit. We could start up Uncle Sam's Dry Cleaning. That doesn't comport with my view of what the role of the state is in a free society. That'd be my first point. My second point is that under our law, Fannie and Freddie have not paid back the taxpayer, and frankly, under the way the agreement is structured, they can't. My third point would be this: Fannie and Freddie still have a monopoly. They are given advantages that other private market participants can't have. I don't know it for a fact, but there's a pretty fair chance that my 12-year-old daughter, if you give her a monopoly, she could figure out how to make a quote-unquote profit. I would not say that really equates with the view of most Americans of what a profit actually means.
There are folks who say, look, the problem is if we get the government out of the business, we're going to basically block out many Americans who the private market won't take a risk on, won't say we'll give you a loan, won't guarantee their loan. So are you going to be shutting out some Americans by saying we're going to put Fannie and Freddie and get the government out of the house?
You know, what I'm going to do is bring in freedom and free enterprise and innovation and sustainability. Number one, we need a sustainable system. It's got to be sustainable to taxpayers, so they're no longer expected to engage in the mother of all bailouts. Second of all, it has to be sustainable to homeowners, and that is, you shouldn't have a government-induced system that puts people into homes that ultimately they cannot afford to keep. That's not good for anybody. Last but not least, it has to be sustainable for our economy. It's not doing working Americans any good to be on the boom-bust bailout cycle that we presently find ourselves on. And so you have to also look at what brought us into this crisis in the first place. And I would think any honest assessment would tell you that you had all types of government policies that incented, cajoled, mandated, suggested financial institutions loan money to people to buy homes that ultimately they could not afford to keep. So that has to change. It has to be a sustainable system. You don't do anybody any good putting them in a home that they cannot afford to keep.
So you have legislation that you want to introduce to say gets rid of Fannie and Freddie, phases them out, but puts in some new players. So what does that look like, the PATH Act that you talk about? How would that work?
Well, technically it's not only been introduced, it has been voted out favorably from the Financial Services Committee that I am pleased to chair. And what it does is basically over a 5 to 7 year period, it gradually phases out Fannie and Freddie's monopoly status. And so little by little, year by year, we essentially invite private market participants to come in and open up a little bit more of the marketplace. We know it'll work. This is a reasonable transition period to allow it to work. Second of all, we do what I call right-sizing the Federal Housing Administration. And if you study housing finance reform, I think most people would conclude that if all you do is reform Fannie and Freddie, it's kind of like squeezing in on one end of a balloon only to have it poke out on another. So the Federal Housing Administration, we right-size it and make sure it lives up to its original mission of being there to ensure mortgages for first-time home buyers, low and moderate income people, and make it also a more independent agency so that we're not politicizing the allocation of credit, which has happened too often when government gets involved in the system. The next thing the PATH Act does is it takes a lot of the work that has been done by Fannie Mae and Freddie Mac's regulator to create what we call an open securitization platform. There were some improvements that could be made to what we call mortgage securitization. We spin this off independently, get government out of the way, but hopefully we standardize it to make sure that securitization is still a good avenue for mortgage finance. And then we start to repeal and modify huge swaths of the Dodd-Frank Act, which basically is keeping private capital on the sidelines from coming in to the mortgage marketplace. And we will ensure that will get done.